Hello. Yes, good afternoon, everybody. I hope you can hear my voice and also see my screen clearly. This is 7th of December. So today I want us to look at just some few patterns that you're supposed to look at when you're trading Bitcoin and other cryptocurrencies. There may be things which I've mentioned before, but today I want to expand on them so that you're able to hear clearly exactly what I'm referring to. So the chart I'm going to be dealing with is this one. This is Bitcoin. One thing you need to understand is this is price action based, which means you're not going to use any indicator. But if you can use an indicator, there's no problem. But strictly, I'm going to be working only on what you're seeing on your charts. That's what I'll be working on strictly. So the first thing is you have to understand that there are levels where Bitcoin tends to consolidate around, and also there are levels where if the price either breaks above or breaks below such levels, then the price tends to move in the same direction for a very long time. So that is one thing you have to understand. Sometimes the price consolidates around given levels before it continues in a given direction, or the price may break above a given level and then continue in a given direction. So the idea basically is not always to focus on any other level, just focus on those levels which look significant and they've been used several times. That's the key. So the first one are horizontal levels, like this one. This is an horizontal level. This is 1 minute time frame. Don't worry about it. I'm just using this for illustration purposes, but I don't recommend trading 1 minute. You can see this here. So we have a resistance, we have a resistance, we have a resistance. Currently the price is yet to hit the upper resistance level. So if you happen to be on this chart and this is happening when the price is touching this level and going down, touching and going down, touching and going down, and it touches again but does not clearly ascend beyond it, then this may actually be a good place to look for a sell from. So I'm not saying you sell just because we have a line here, but we are selling because this level has been used not once, not 2 times, but 3 times. That's when you look for a sell. This is an example of a resistant horizontal level. So let's say horizontal support level. So we have this one here. You can see we have a very good support here. It has not been used in the past, so we are not interested as such in it, but there is a level here which looks interesting. We have a support there and we have a support there. So look at what happened on this chart. This is, I believe, when was this? This was on 5th of December. Look at how nicely the price used this level as a resistance. As a support. We had a support there. We had a support. We had a support. And we had a support here. Then the price broke below this level. There's an attempt to come back upwards. For some reasons, the price did not come upwards. So this here could have been the correct place to look for a sell from. Right here, after this breakout, you should have waited for price to pull back at least up to somewhere around this level here, so that you can pick a sell position. So this is one setup. This is like a breakout setup where the price uses a level as a support, then it breaks below it, and then it pulls back again but does not touch that level. If the price had come back and touched it, that could have been a good place to look for a sell from. So for some reasons, the price did not hit this level, so we didn't take that sell. If that could have happened, we could have taken a sell position. So the same thing also applies to resistance levels, where you have price using a level as a resistance, then it breaks beyond that resistance, and then it pulls back again to the same resistance, then you pick a position when that happens. So that is just one example. The main thing which I'd like us to look at here is I want us to look at converging wedge formation and expanding wedge formation, and also, if time allows us, we're going to look at rectangular formations and also other shapes like triangular formations, but all those falls under just converging and expanding wedge formations. So I want you to look at this. Look at whatever I'm going to draw now. We have this here, and then we have another one from the top. So just look at how nicely this shape was formed and what happened when the price was consolidating within it. So we have that as a resistance. We have this level as a resistance. Then we have this level as a resistance. And then we have another level here. We have a resistance. Then we have another level here. This is now a support. We have another support here. We have a support there. Then we have a support. And then there is a breakout. So you can see that on the 1 minute time frame, the price was actually using some levels consistently. That is, after this resistance here, we had a second resistance. Then we had here as a resistance, which means we could have taken a sell position. We could also have taken a sell position here. We could have taken a sell and a buy at the same time. I'm going to explain why. When the price came to this level here and touched this line, we actually took a sell position. Our stop loss is above the high of this candle. A sell there. Our stop loss is here, and then our take profit is along this line here. Then when the price broke above it, then it came down. We could have taken a buy position based on the fact that this is a breakout. We could have taken a buy either along this red candle here or somewhere here. Could have taken a buy position. Our stop loss here, our take profit is somewhere here, just where we had the stop loss for this candle, and the same thing applies to where we could have had the take profit here. So this could be the stop loss, this could be the take profit. So you can see what happened. The price did not continue upwards. It actually came down, justified this sell we had. It broke below this level. Then we found a position to take a sell position, which means the price actually went our way ultimately with 2 trades into winning. So this is a very good example of a converging wedge formation, and the idea normally is to wait for price to either break below it or break above it. Then you pick a position in the direction of that breakout. So if the price breaks above it, you're supposed to pick a position in that breakout, in the direction of that breakout. Or if the price breaks below it, you're supposed to pick a sell in the direction of that breakout. So in this case, we could have taken a sell because the price has broken below it. If it pulls back, we could have taken another sell there. So there is another example. This is it may not be like converging as such, but let's draw it and see what it means. Yes. So look at this. We had a resistance here. We had a resistance. We had a support. We had a support. We had a support, and we had a support. The price technically gapped below everything. This is actually a good sign for a sell. If this happens, if you have a line here, then the price for some reasons gaps either above that line or below it as it has done here, this is usually the correct time to look for a sell position. It's always the safest way. It's like a confirmation that indeed we are sellers based on this gap, and that this was a very good support level. That's why the price could not, it just gapped below it, not above it. Let's check another example. Okay, look at this here. We have that, and then we have that. So this one here, there is a resistance. We have a resistance. We have a resistance. There is a breakout. There's a retracement. You pick a position. We also have the low one. So this was a very good buy. If you are here when this was happening, this could have given you the correct place to look for a buy from. You could have taken a very good buy, expecting the buyers to push price much higher. The next example, this may not necessarily be a shape. It could be a rectangular formation. Let me draw it so that we see it. The same principle applies for rectangular formations. Once the price breaks above this shape itself, you wait for a minor pullback so that you can pick a position in that direction. So like we have a very good rectangular formation. The price has basically broken above it. You can see what has happened after the breakout. The price went up, then it came back down, touched the same level. This here could have been the correct place to look for a buy from. So you can see clearly that if you took the buy there, your take profit could have been somewhere here, and your stop loss could have been somewhere here. So this is like a ratio of a risk of 1 to 2, because let me see, this is 44.39. half of that should be 200 and something, 2000, correct? So it's 2000. So it's like 2 times. The price has gone 2 times the shape we had here. Then we have another one. This is not a shape as such, this is just a level. We have a very good support level. Look at how nicely the price kept using it as a support here. We had a support, we had a support, we had a support, and we had a support there. So we also have another level here. This is just a mere resistance level. This you may look at this as an M formation. There's a move up, there is a move down, and then there is a move up, and there is a minor move down, and then there is a move up, then we have a move down. So it's like the price could not go back to where it started, it couldn't go back down. So this is not a very good M, but if this was a good M, then we could have expected the price to continue down at least up to the start of that shape, which is somewhere here, somewhere there. We also have another shape here. So do not be discouraged. Sometimes you may see a good shape, but the price for some reasons do not respect it. That does not mean that shapes do not work or patterns in Bitcoin do not work, but it only means that on that instance it didn't work. But normally they tend to work very, very well, especially if you learn how to support them with other time frames. So we also have another one we've been looking at so far on converging range formations. We've not looked at expanding range formations. Let's see. We have this, and then we have another one. So basically this is a very good resistance trend line. This is a very good supportive trend line. There is a break above it. As it is right now, we could have taken a buy position, which could have ended into a loss because the price actually went below. It went up but didn't go up as such. So this was a loss for some reasons. Let's see if we can get another good example. So this looks like a converging range formation still, not a very good one. It's like we're trying to force it, so we won't look at that. Okay, this could be an expanding wedge formation. So ideally, it's like as the price progresses into the future, it continues to move wider. That's the radius of these two lines continues to expand. This is what is called expanding range formation. And the same principle applies when the price finally breaks above. It's always a sign that we are now continuing in that direction. And in case the price breaks below it, it's also a sign that we may see the price continue in the same direction. So I think that should be the end of today's webinar. I want us to meet again next week at the same time. Thank you and see you.